Hello and welcome. This will be a video on the logic of price, the psychology behind price, and how I use that to my advantage to participate into moves. So once we see price take out external range liquidity, what is the average retail sentiment after we take lows? They are anticipating price to immediately continue. We just had a market structure break. Every break is an area where they think they can continue for shorts. Now, us as quote unquote smart money traders, well, we're all retail at the end of the day, but us as smart money traders, we are trying to get involved before we reach external range liquidity. Why? Because we understand that external range liquidity, large institutions are order pairing. So what can we expect there? Either a retracement because they're pairing orders, or a full-on reversal because they're exiting their positions, and then they're going to start a buy program. For an example, if this turns into a buy program, to then take these liquidity and then, for example, initiate a new sell program to then again mitigate their positions. That's all they're doing. They are just creating open float liquidity to then take it and then continue. For example, right here, after we break this low, everyone's obviously looking for continuation sells. And what does the market do? They deliver a fake weak high, they sweep it, and then they deliver a bit of downside, but it should be NFP. But NFP made the other manipulation and then it dropped. So every time we break through external range liquidity, we are going to generate open float, which means more liquidity in the market to then take, then make a real move. And then what happens after we drop here? Again, we create liquidity to then finally go down. That's why every time after we reach external range liquidity, you don't want to be looking for continuation sells, because you should have been selling from, let's say, the smart money reversal right here. For example, this change in state of delivery, this change in state of delivery, this change in state of delivery, this one. You want to participate when price is at premium prices. You do not want to chase price after it comes back, takes external range liquidity, because that is discounted prices. You don't want to sell something when it's cheap. You want to sell it when it's expensive. Right here, after we break this low, what does that mean? If we take the range from this high to this low, look at how beautiful it comes back to premium before dropping down. So above here is premium, right? Right here, after this change in state of delivery, you want to sell. And right here, or even before there, you want to exit your positions, because large, quote unquote, central banks are removing their positions there for a win, because they just move the market up here, loss, loss, loss. They push it up, 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 up. They lose money. Well, not lose money, because they're already in profits from all these longs, for example. So they have longs, and then they push it back up. And then while retail chases this, gets stopped out here, because for retail, if we zoom to the lower time frames, this is, I'll go over this. Let me see. Wait, let me actually check price action. Okay, that's not it. Okay, so every time we break upwards for retail, for example, after we break here, they're long all the way to Narnia. So after we break this, they're looking for longs. Now, obviously, this is a breaker pattern, so that long is higher probability than just a order flow continuation, because we obviously want to see a sweep and then a continuation. What happens? Long in discount, stopped, long in discount, stopped, long in discount, stopped, stopped, finally makes the move. Finally, after they're mentally broken and thinking that the market is finally turning back down, they keep long on it. And then once they're wrecked so much, they're like, okay, clearly the turtle soup is not holding. So now I'm going to flip short. What happens? It finally goes back up after sweeping liquidity. Well, we are patiently waiting, or unless you're an advanced trader, you can trade the run up too. But we are patiently waiting for price to reach premium levels. And then in premium levels, we want to see a change in the state of delivery. And then we want to follow the train all the way back down. And every single sweep is for us a selling opportunity to go deeper. I'm actually checking if there's SMT at these highs because I'm curious. Okay, there was not. So now you've understood what I've explained. Right here, when we reach external range liquidity, and everyone's thinking it's going to continue, come back, continue, come back, continue. No, we are at external range liquidity. We do not know what's going to happen. So we are going to watch price. So after we take external range liquidity, we are expecting potential price action like this, or this, or this, or this. Now, obviously, these ranges back up are tradable, but just for explaining sake, let's just act like a lot of people get wrecked because we can trade them, but the average retail trader cannot. So after we drop into this key level, first of all, I want to just bring your attention to these candles. Pay attention to what I'm going to explain you because it might change your trading for the better. When we displace through the liquidity, right? When we fall through it and displace, then it delivers like a candle more down, and then finally it comes back. When we displace through it, it comes back later. When we displace through it, it comes back slower. When we displace through it, it comes back slower. But when we drop through here, close on a sweeping basis, then we have the confluence that this is Monday. So the weekly open is right here. And what do we know about prices below weekly open and above weekly open? Prices below weekly open are cheap, quote unquote, not fair value. Fair value is going to be for us above weekly open if we are shorting and below weekly open if we are longing. So right now, prices are discounted in fair value. We have a change in the state of delivery. So retail right now, as we broke under here, their brain does not go to, okay, this candle right here does not close beautifully. We are potentially retracing here or deeper to then go down. That's what they're thinking. They're like instantly, okay, we dropped here, propulsion block, go down, go down, go down, go down. Or weekly fair value gap, go down. They don't understand the logic of creating open flow liquidity, wrecking everyone, and creating a new market maker biomodel. Right here. When we have this H1 change in state of delivery, obviously indicating that we might go up. So smart money reversal. And then once price comes, this is your low risk buy. This will be your first stage and potentially your second stage to weekly open and Monday's high. And that is aligning with, let me actually check, is this? Okay, that's not, okay. I was going to check if that's aligning with the weekly fair value gap, but the weekly fair value gap is up here. After weekends, obviously. Am I tweaking out? That's not possible. Ah, that's because Friday's price action is right here. And Friday's going to end here. I'm going to keep the line to show you. Well, that will be the high of the week. So, after we have swept liquidity, smart money has done its order pairing, and institutions, I mean retail, is following the trend down, 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 down. But we have seen this sweep into changing the state of delivery. So right here is areas for us to long. And while quote unquote dumb money chasing this down. For example, seeing this high, like they're looking at this like high, low, high, low, high, low. Trends down. Let me short. What happens to them? They're like, we're in profit. Woohoo! Let's go. We're gonna win. They get wrecked by news delivery. Why? Because smart money has paired their orders right here. They indicated through a change in the state of delivery. After they get a change in the state of delivery, obviously they want to drop prices back into discounted levels. So this H1 discount, they get more orders, push it back up, and then we are still inside of this range until we break this high. So we are already coming off discount. We come back into discount. And then right here with, so this economic news event right here is Powell speaking. Let's see what was here. Some EU news. So what happens finally? Price delivers to our levels that we were looking at. Okay, this I was tweaking that weekly candle was correct. My bad. So ignore that. And then we deliver to Monday's high. Crazy, right? So while every retail trader is looking to short this range, we come into premium, they want to short it. We come into premium, they want to short it. We come into premium, they want to short it. We realized, okay, we have reached a high time frame objective. We are potentially creating more open flow liquidity to then deliver downside. And why are we expecting it to create liquidity? Because right here, we instantly manipulate it down. If we want to buy in fair value, so in expensive prices. So above weekly open is where you want to be buying, and below weekly open is where above weekly open is where you want to be selling, and below weekly open is where you want to be buying into fair value, aka the weekly open and Monday's high. So I hope me explaining the logic of price in this way helps you guys, because the market literally runs on this. Every week we're going to have Monday either. That's why I don't like trading Mondays, because it can just randomly pump, or it can consolidate, and then we finally make a Tuesday out of the week, and then we pump to liquidity. So if I miss a Monday move, instantly dropping, unless I'm extremely confident in it and it's close to drawn liquidity, then I don't care. Why don't I care? Because it might have as well consolidated. And if we drop like that on Monday instantly, what are the odds Tuesday, Wednesday, Thursday, Friday are going to continue dropping? Because Monday already made the manipulation. So if Monday does not instantly drop into a high time frame key objective, we are expecting it to first manipulate towards the other side with the weekly open. I hope this helps you guys, because this is what the market runs on. Every single week, the same thing. You want to see weekly open, you want to see price manipulate against your sentiment, and then if you are buying, you want to see it sell off first, and then we buy it up, enjoy life. And then obviously, every time you want to see weekends get taken out long, weekends get taken out long. This is how the market runs, guys. Please do not FOMO. Please do not chase price. Be smarter. This should help you guys a lot. This really should help you guys a lot. It's just clockwork. It's actually insane. Thanks for watching. It's okay, guys. You guys don't have to tip me $1,000. I'm pleased to give you guys this value. Alright. Good luck studying. Please ingrain this video in your brain, because this was a very nice lecture. Now high, low, higher, high. Now if we take this range, what happens? We come, discount, sweep out early longs, this plays up. like clockwork, right? Sweep in against your sentiment, enter. Crazy, right? Right here as well. We come back into discount, sweep. We come back into discount, sweep. It's just like clockwork. Excuse me, this should be range. Oh, okay. I don't know why. What was this range then? Was this all? I don't know. Anyways, enjoy. Enjoy. Beautiful video. All right, peace.